Morning, guys. How's everybody doing this morning? It's Tuesday, it's rainy outside in England, it's looking grey, it's looking nasty, but I am back in the office and in front of the screen. Cam didn't go up yesterday, it didn't go down yesterday either. There was something that's set up slightly, but I just didn't take it. I didn't feel like it was actually there. Probably should have in hindsight now though, because I could have scaled out and took some good scales on it. But where it actually went back up and finished up for 9 o'clock, it wasn't that much of a good entry really if I was going to leave it all until 9. But I've got some good stuff for you this morning. I've got FTSE Days trade manual. Someone sent it to me yesterday and just amazing, very funny, very, very funny reading through it and looking at the setups and that. So I'm going to see if anything's set up, then I'm going to get that on the screen and go through it with everybody. Just because I think it's obviously he was a ledge. I really enjoyed following him. I thought he was dead funny. He was really interesting character on Twitter, and I think he was like the original guru on Twitter. He was like the first one that was doing it. I think he had his room, his FTSE room and stuff like that. And in the end, I think he started off doing all right, but in the end he was just like literally doing his arse, and it was dead funny. Somebody sent me his trade plan though, with like a big. It looks really professional. Like it's polished. It looks quite good because you got to imagine it was probably done about 10 years ago, maybe more than that. And I had to read through it yesterday, and it's pretty funny. I'm sure you guys will like it. Ultra FX, hello, Kurt. Morning. Trend the market short at 8.34. Nice. Short the DAX trend the market. Just to clarify. Morning, Merlin. How you doing, Matt? You alright, demo trader? Good morning, Dave. How you doing? Oh, you've been on Walter Vanelli. He is a slippery snake, Walter is. Let's just get these off. But yeah, so let's get into it, right? I'll get into the FTSE Day playbook. Just very funny. Makes me laugh because of the wording he uses in it more than anything makes me laugh. He had this trade setup called the wash and wipe FTSE setup, and he actually explains it in the planner. I think it's amazing. I'll just have a look, see if anything's setting up on the DAX for me. Don't think it is as we speak, so I might as well pull it across and let you guys into the holy grail secrets of how to trade the FTSE. You'll enjoy it. The only problem is, right, I don't know how to send it out on Twitter. That's the problem that I've got, because I don't know if you can put PDFs on Twitter, because I was going to send it out yesterday. Let me just move these across onto the screen that's on. So this is it, guys. You will literally be making thousands of pounds in the next couple of weeks if you can implement these strategies, right? So this is the FTSEday.co.uk room trading ebook. Now, if you don't know who FTSE Day was, I think his account is on Twitter still, and you can still go and follow him and look through his previous tweets. Same as say, he was the original ledge, he was the original guru. This is where it's all followed from. I think he was one of the first people to have a trade room. And somebody pointed out yesterday, I think that, you know, the guy that runs Trade Room Plus on YouTube. This might not be correct, but I think it is. Trade Room Plus, it's like, seems like a good guy, to be fair. He was in this room as well, like back in the day. It was obviously a long time ago now. And you'll see that the trade examples are from this are like from 2012. So I think I started my trading journey in 2011. I think maybe a bit earlier than that, but I put my first trade on in 2011 in the Libyan oil crisis, as I've explained to you. I think my first trade was £20 a point long the FTSE in that crisis, and I got hammered. Literally did my account in very quickly. But this guy was sort of on Twitter as I was just starting my journey off, and I used to think like, oh god, I bet he's making loads of money. I bet he's dead profitable, because it sounded like he really knew what he was doing. But then obviously, as time progressed, then obviously you got a little bit more knowledge, and you worked out he was obviously, you know, he was way out of his depth. I think he had a drinking problem though. A few people have pointed out to me that at the start he was actually a pretty good trader, but he just went worse and worse and worse and worse. And it got to the point, like I've told you, where he was just fading these massive trends. And he was always on the wrong side of the market no matter what, but he'd always be there and calling it out live. Because I think once his room failed, he started like calling out his live trades on Twitter. And somebody actually made an account called FTSE Day Fade, where they just every trade he put out on Twitter, they would fade him. So if he went long the footsie, straight away this account, this Footsie Day Fade would come on, and they'd just get short the footsie. And if he went long again and tried to average into his losers, which he did a lot of the time, they'd just take the opposite of it, and then like they'd come on showing the gains in their account. Like no shit, like they had legitimate gains in their account from fading him. Now I don't know who it was that made that fade account, but it was one of the funniest things ever. But I wish this guy all the best really, because he didn't see him. You know, like today's modern scammer that you see on YouTube or Instagram that are like trying to ram it down your throat with Lambos and bottles and all that. This guy wasn't that, and he was quite funny as well. So I would still subscribe to him. Like if he was around, I would pay 40 quid a month just for the comedy value, because he was so funny, and the amount of sort of like comedy value and the shit that he used to sort of bring to Twitter with everybody sort of like giving him shit and then bantering him, and the stuff that he used to say, it was worth it for the, you know, like that would have been worth the 40 quid alone for the sheer comedy value. It was amazing. So I will send this to anybody. If anybody wants it, let me know. I'll have to email it to you. But it's very, very good. And it's your typical sort of like retail stuff where he's sort of calling everything after it's happened, and he's not giving anybody any actual really sort of information. But it's amazing, and he calls it like the wash and wipe of the 50 magic number. Just so funny. The key to price action trading, right? He's got it. He's got the key. What you're looking for, and then he's basically trading a moving average cross as well on a 1 minute time frame, which is, you know, you're so late, aren't you, with a moving average cross anyway? Very funny. The one-legged man, right? So this is one of his trade setups. Trade idea. Have a read through it all. You can obviously on YouTube you can pause it, can't you, and have a look through it once the video is set. But it's just really funny. He seems to like putting it's all hindsight stuff. Do you know what I'm saying? So he's never giving any. And then he's got something called advanced technique. So obviously, if you want to become a real Footsie Day ledge, you can start reading his advanced techniques. And then he's put, ouch, sometimes however good your setups are, you can't control anything that the market does, hence why we have stops. But this guy never had stops, ever. Like, he never had stops. I think I saw him go like 1,000 points offside on 3 scales before on the footsie. And then he held that thing all the way back in from being 1,000 offside, and then like made like 12 ticks on his entries when he come back into it. It was amazing. And he was getting so much stick at the time, it was just so funny. But these guys are Among Us guys. Apparently he's living in Thailand now. Apparently, I've been told. Now I don't know if that's true. But yeah, trade safe, and as usual, if any questions, please contact Mike Lucas. I assume that's the name of the guy who it was. He's very funny. So if anybody wants it, let me know. I'll send it to you, because sometimes it's good to read these things, because you realise, one, you realise if everybody's looking at this type of stuff who are retail traders, then you've got a good chance of obviously succeeding. And two, it's just good to see what other people are thinking at this end of the scale. Because same as say, like if you pull up his entries, I'm sure that you could fade him and probably make money. I'm pretty positive of it, to be fair. Could be a definite winning strategy for somebody. So let me know if you want it. It's the Holy Grail. It's there and it's free. I'm thankful to the guy that sent it to me yesterday, though. Just because obviously I love looking back over it. It's like a relic, a trading antique. Whichever setup you prefer, we do recommend that you tile the charts horizontally on your screen. I don't understand. Oh, it's unbelievable. Amazing stuff. I thought I'd just put that out there, but if you want it, let me know, guys. It's free. I'm not going to charge you for it. Some free edge for you. Let's have a look at what's going on in the stream. UltraFX Footsie Day Trader. He's not around anymore though. He went off piste a while ago now. I don't think he's probably been around for about 4 or 5 years, you know. But apparently he moved to Thailand, and I wish the guy all the best, by the way. I think he might have had a drink problem, but I wish him all the best. I don't wish him any negativity at all. And I hope he gets back into the market and does some footsie stuff, because I would subscribe, I really would. It'd just be funny. I think he'd have a good following. He's got a little cult following from back in the day that everybody loves him. So, yeah, he should get back on there. He's basically probably only the same as what Walter was doing. But I just think Walter's probably a little bit more better at like being on social, so like he sort of makes himself look like he's a bit more of a ledge, whereas Footsie Day never sort of he didn't fight his own battle, so he'd just be getting dog's abuse all the time off everybody, because he'd be holding like massive losing trades and people would just be like giving him loads of stick, but he never barred anybody. He never like said like shut up, or like oh well, look at what I've got, or he never had any sort of like ex-banker stuff in his profile. Whereas Walter does that. If you give Walter any stick, he'll buy you straight away. Same as say I'm barred. But Footsie Day never did that. He never sort of like but he took everything that everybody was giving him, and it used to just really make me laugh, to be fair. But what a ledge. I would subscribe. He is worth 40 quid a month all day, definitely. So get back into it. If he's listening, or if anybody knows him, tell him to get back into it as soon as possible, because he is an absolute ledge. Morning, Angela. Hi, Razza. How you doing, Nils? Good morning. Danny, how you doing? Good morning. Anybody got any trades he can throw out this morning? Oh, Mark's got one. Looking to go long, scalp at yesterday's low, 415, maybe 430, depends on price action when we get there. Right, okay. You're thinking we're going to push down to the 30s, are you? So you're looking at a push through this low and you're thinking about hitting it long. Let's have a look, see what we're looking at on the other time frame. So Mark's got low 415 and maybe 430s. I assume you're on the cash chart like me then, Mark. I get you. So you're thinking if this low gets swept here, yeah, I can see what you're thinking there. That would be a nice little bounce area for me too. If they pushed down and swept that low, you'd be thinking you'd want to try and get long down there. That makes sense, Mark. Nice little trade call. I hope we get it. Yeah, you were in his room here, weren't you? You were in his room. Yeah, he seemed to always... This is the thing, right? He seemed to always have like these magic numbers which he called a wash and wipe over. And he'd be like, 80 is dead key for the footsie. Like, if it hits 80, then you sort of have to fade it. But then, like, the thing would go through 90, and then it'd go through, like, 98, and he'd still be short. And then he'd go through, like, 107. 80's clearly not worked, and then he's like, right, I'm adding another scale here at 107. It's like, well, I thought you said that 80 is the key number. If it's gone through there, like, you should be stopped out now. And then it's going up to, like, 147, way past 80, and he's like, right, another scale here. Looking for another wash and wipe, but it's like, but he's still holding you one that you got in from it, 80. Just amazing. But he did it all live. Very funny. Oh yeah, Ultra, DM me your email. I'll send it to you. It's same as said. I don't think anybody will be too bothered or worried about it, because it's not like you've got the keys to Buckingham Palace when you're getting it sent to you. But it's just good to have a look at. He was the first. He was the number one. This guy was. He was the number one. I don't know that there was many people before him that were doing it, especially on our side of the pond. I think when I first come on Twitter in about 2011, the only people that were on it in a big way, sort of that, was, do you know that Trader Stewie guy and like Scott Redler and people like that? They were sort of like big at that point. And then Footsie Day was the one in the UK. But apart from that, nobody was even around. Like all the big accounts now that you'd see on Twitter, I think Tom Dante was only just sort of getting his account together at that point in time. It was very early in them types of days. And then obviously I think probably 2014, 2015, 2016 was when all these rooms started going off and people were starting to like sub to rooms and stuff. Hopefully I get a trade on today. Hopefully. We'll see what happens. One thing I'm going to do though, guys, right? I'm going to have to reduce my risk on this account to 1.5. There's no other way that I can trade this account, really. Because, like, if what happens on So let me explain if you weren't in on Thursday. What happened on Thursday was, I've been risking 2% of this account, right? So the account, the trade risk per trade is 60 quid. Now, on Thursday, I had a trade set up where I would have been able to get £4.75 or £5 a point on to risk 60 quid. Now, what happened was, flicked onto the account, tried to get the buy-in, and the ESMA rules about leverage turned up, and I wasn't able to do it. The maximum point size that they'd let me get on with my account size at that time was like £3.30 or £3.40, something like that. And it's massively affected my my account. Like my live account, my proper account, is up more than this now, and is like quite consider. It's a decent amount up more. So that's affected me massively. Now, my best trades are when I get the tight stop in a pivot when we're above or below balance. And if it happens again, I can't have that. I can't deal with that. I'm not going to be able to make the money that I need to. So I've got two options. Either I can put more money in my account, but then it's going to skew the challenge, or I can reduce the risk. So if I'm reducing the risk to 1.5%, it will mean that I'm only risking 45 quid. Now, that will mean that my trade size, because I know that my stop will never be that small to go above £4.75 or £5 a point on them trades. It should never happen, really, because my stop would have to be really, really small. I think it could work if I risk 1.5% of my account on my actual risk per trade. So I'm gonna have to do that, else it's not gonna stack up. It's gonna mean the days when I have my big winners with the tight stops, they ain't gonna pay me, because I'm not gonna be able to get the position size on that I need. And then I'm gonna take all of the losers at 60 quid, and it's gonna obviously affect my overall balance and profit going forward. So other than throwing some money in the account, there's nothing I can do about it. I can't change the account to a professional's account, because obviously, like I explained last week, they're not going to let me because it's such a new account. So it's one of them. So I'm going to have to drop down to risking 45 quid per trade, and I think that'll work. So it is what it is, but hopefully it won't affect it too much, I don't think. We'll have to see. Obviously it's going to affect the actual wins and loss sequences and going forward, but I would much prefer it to be that way, rather than taking the losers all at 60 quid and then obviously the big winner showing up with a 12-point stop, me trying to get £4.75 on per point, and then them saying no, and then only getting it at £3 a point like Friday last week, because it's massively affected my account. Like my account should be over three. It should be like 3.4 or 3.430, something like that. And that's a bit of a setback really for this challenge account, because I want to try and push it forward as much as I can, but I've got to be careful, because if that happens again, and like I said to you, if I don't take advantage of the one winning trade, how my strategy has been going lately, I can have like 4 or 5 losers on the row, which will all be at 60 quid, by the way. And then I'm going to get one tight stop winner where I've got 4.75 or £5 a point on, and they're not going to let me do it. Then I'm never going to be able to win my losses back and push my account into profit, which is exactly what's happened again. Because same as say, I should be up, and it's a bit annoying. And I can't. If it happens again, it's going to be really, really annoying, basically, because it's sort of it's keeping me down, basically keeping my account down. Let me just explain to you what happened. And it was in this sequence last Thursday here, because I don't know if everybody was in the room watching who was in today. So I had a trade in here, in this sequence here. I was getting long in here. Now my stop was going underneath this low here, that point, okay? And I was getting long in here, and I only needed a 13 tick stop, and I knew that at the point of my entry I needed a 13 tick stop, right? So I needed around £5 or £4.75 per point. But you go over, you put your £5 in, or £4.75, but I put £5 in it, to be fair. That's what I went for first. And let's go for a 13 tick stop. So I'd be risking £61.75, which was my risk, which is I've been risking 60 quid. Or just above, 60 quid or just above, because obviously my account's just been slightly above 3k. So let's just have a look what happens now, right? Press deal. Insufficient funds, right? And that's down to the ESMA ruling. So even though I'm only risking £61 and I've got £3,286 in my account, they wouldn't let me get into the trade. Now, the whole point about trading and using risk reward is so that when you know that you're going to be, wrong at a certain point, only 13 ticks away, you can leverage more money. You can get more pounds per point or more leverage on per tick. That's then going to make you more when that trade goes in your favor, right? So it's like basically saying to me that, right, you can trade, but you've got to trade with, you normally trade with a sniper rifle, but now you've got to trade with like a water pistol. Like, we're going to take your potentially bigger days, your bigger R gainers away from you, and it's going to mean that I'm just literally treading water. Now, that was a rare one. I will admit that was a rare one, that 13 pip stop. Like, they don't normally set up that tight, them pivots don't. They're normally about 20 or 25. But if it happens again, it could massively affect my account balance going forward on this challenge account. And it doesn't really give a fair example of my trading, I don't think. And it is a bit disappointing. Because basically I would have been in at £4.75 or £5 a point on that trade, and it would have made, like that trade alone, I would have made like 400 quid in a day on this challenge account, which is a massive gain, huge gain, and I haven't taken full advantage of it. Which sort of, like I say, it's like you're trading. It's like you're a boxer and you've got one hand tied behind your back. You can't hit the market when you've got your biggest day, like your most sort of biggest gain setups. So it's something that I need to sort out. The only thing that I can do is knock it down to 1.5% risk, which will then reduce my position size, basically. AP trades, yeah, I want to use IG though, dude. AP, right? I've always used IG. I agree. Thank you for your pointing it out. That would be the no-brainer thing to do, but I just feel comfortable on IG. Like on my live account, I just trade 1% risk. That's basically what I do, Angela. And same as say, I've never had that problem before. I've got more money in my account, obviously though. But you'd still, same as say, my IG account is my proper one's been going now for like since 2011. I don't even think they've asked me if like professional or ESMA trading rules or anything like that. I think they just automatically upgraded my account to that point because I've been with them for so long. So I think they did it automatically. I think if you were a customer before ESMA, when they sent a survey out to say like tick yes or no at that point, and you didn't have to provide any sort of statements, financial statements or anything like that, saying that you've traded a certain product for a certain notional value. Whereas when you're trying to do it now, because you can do it with this account now, you can get past the ESMA rules now. But what they want off you now is like financial statements saying that you've been in a financial, you've been in like you've had some sort of experience in a trading sort of risk role or something like that at a bank, or you've traded a certain amount of notional value of a product in the last 12 months. Like, they want to see this type of stuff to give you the professional account. Now, because obviously I was with them way before the ESMA ruling, when they dished that out to their accounts that were live at the time, they just sent you a questionnaire saying, right, are you happy for this and this to happen? And I just ticked all yes, and then obviously they upgraded my live account to a professional account at that time. So it wasn't, they did it before the ruling come in, so I think they got around it by, because obviously IG didn't want everybody, losing accounts, did they? And if you notice at the time, IG's share price massively tanked. I think it tanked like 25% when that ESMA ruling come out. So they were obviously very worried at the time about losing accounts and stuff like that. So they made it as easy as possible for their current account holders to upgrade to the professional account before the ESMA ruling come in. And I did that at the time. So that's what happened with my live account. But same as say, with this account, they just make it difficult. So something to just be aware of. But same as say, if I reduce it to 1.5, I should be okay. I should be okay. I think I'll just have just the right amount on, like, because I know the average stop size that I use. And that one on Thursday was very, very tight. To use a 13 tick stop on a 5 minute chart with a tight pivot like that, like they don't come around very often. Trades like that don't. They're more like every 6 months, something like that. They're not my sort of stops at that time period are normally about 25. So I'll do that. I'll recalculate it and just go 1.5%. But I like IG. IG a good AP. So same as say the reason I like IG is the withdrawals are really good. Like I don't know if it happens if you with them, like you have to set a new account up. But if you want some money out of your account or you want to try and get money out, they give you the money on the day. And I've never had any problems with slippage or anything like that. Nothing off them. Obviously, during crises, like if you get a crisis where a big sell-off's happening, they do go dead. I don't think you can ring them up or anything to put any orders in. But I think most platforms do, don't they? So I don't know any platforms that don't have all them circuit breakers on where they switch off and don't answer the phone. There's very few. But for withdrawals and for slippage, they've been really good with me. Execution's always been good as well, so I can't really fault them. And I same as say, I know my way around the platform, so it feels familiar to me. So I just want to use that. And then also I use that for my live account as well. So it's just easy to just have one platform open and then slip through, log out, log into another one. It's just easy. So I'll stick with IG, but same as say, if I just reduce my risk to 1.5%, I think I'll be good. But that ESMA rule, it is a bit I mean, I agree, I understand why the ESMA rule's out. I get it. It's to stop people from doing their arse with their account. And that's fair play. At the end of the day, I think it come from the Swissy going, didn't it? I think that's when when they changed it all, because were people going like massively offside? Ed, have a good day, mate. With the Swissy, did a teacher go down 227,000 negative? I think that happened, didn't it? I read reports of a headmaster or a headmistress or somebody, and they'd done their arse on the Swissy. I think it had cost them I think they'd had £7,000 in their account, or £7,000, and I think they lost £225,000, I think. And when all that shit sort of washed everybody out, I think that's where ESMA come from. Because when you're a professional trader with IG, that's that's one of the things that was on the questionnaire that I filled out when they put it to me back in the day, when it first came out. It was one of the questions on it was, if you're a professional trader, if your account goes into negative territory, you owe IG the money. Now, I think correct me, I might be wrong on this, but I think if you're not a professional account, then if IG take you into negative territory, it's their loss. Like, they can't chase you for that loss. It's that that loss is theirs, not yours. So they have to fill you. They have to get you out of the market at zero. If it goes negative, you don't owe them the money. If you clicked on professional account, or you're down as a professional account with IG, I'm pretty positive that they can take you through negative territory and then chase you for the money. I might be wrong with that. I did read the terms and conditions on it when it came out. It was a long time ago though. Also, I think with a professional account, they don't have to take you out the market at your stop. They can go straight through your stop, and you get filled at their discretion. Whereas if you're not a professional account with them, then they have to take you out at your stop if it's a guaranteed stop. So there's a little bit, there's some different type of terms and conditions for each account. Now, I would suggest if you're a new trader, you don't want a professional account. You definitely don't, because you probably undo yourself with a professional account if you're using too much leverage. I would suggest that that's probably giving somebody, like a machine gun when they don't know how to fire a water pistol. But if you're a professional and you can use leverage and you feel like you're making money, then obviously it affects you massively by not having a professional account because you can't get the leverage on that you need. There's Mark Wogan's roof test, just to point it out. Just have a look. Have you taken that one, Mark? Have you hit that roof? I always have that line in there because it's always like a pivot to me. This here. When you get this and you get like a pivot down, it looks like people say that's a double bottom or something like that. But when you break the roof here and you sort of auction back into it, it's normally a nice long area to scalp from. I bet Mark Wogan's taken that one. I'd be surprised if he hasn't. Retired teacher lost 16 grand life savings in 22 minutes. Yeah, after trying online currency trading. Sounds like one of my days. It's a shame though, but same as say, this is the risk that you're taking, but you've got to look into the terms and conditions of every account and work out what is my maximum risk here? What am I actually at risk for here? If because you get a black swan and the shit is the fan. What are you at risk for? You need to know. Everybody needs to know. So I would always say, read the terms and conditions. Work out what your account is. What are the stipulations for your account if it goes through zero? Do you owe your broker the money, or do you not? And then work out what side of that fence you want to be on. Because for some people, it might make more sense than not having a professional account with the margin that you need and the leverage that you can get on. You might not want that. It might do you a favour. You're not taking that one, Mark. What kept you out of that then, Mark? Interesting. Let me know. As a discretionary trader there, because from my perspective of what I think I know that you'd likely be taking, I would suggest that you would have taken that one. So I'm interested in what kept you out of it. Was it price action? What kept you out of that there? Because I would suggest that for me, looking at that, I'd be steaming into that there, discretionary. Just off this pin and then this hold here, and then I'd probably put my stop beneath this low. I don't know. What kept you out of it? Let's get into the inner sort of workings of your discretionary sort of thinking on that one. I think it could help some people. Because like we say, it's the ones you don't take that keep you profitable, really, isn't it? That's what I was thinking, Nick. Broken roof resistance becomes support. That's exactly what I would be thinking. I'll be trying to probably run some of this up to the top of that balance zone here. I'll say, do you know what though, Sierra? I'll be honest, right? If this margin rule would have come into play when I first started off in 2011, I wouldn't have lost as much money, And that's my honest opinion about it. So I do think it's a good thing. I really do. I wouldn't have lost as much money as I lost when I first started off if the margin rule was in. I think back in the day on the FTSE, I think I must have only had about 3 grand or 4 grand in my account, and I was like £20 a point long on the FTSE. And there's no way I would have put how much you need on the FTSE now to get £20 a point long. Let's have a look. £7 grand. So you need 7 grand in your account to get long the FTSE. The stop doesn't make any difference anymore, does it? So you need 7,220 quid to get a £20 a point long on the FTSE. That's how much you need in your account. Now I think off the top of my head, I would have only had about let's say 2 or 3 grand in my account, and I was steaming in £20 a point long on my first ever trade, which I lost, by the way. I got my arse handed to me on that trade. So, would it have saved me a lot of money? Yeah, it probably would have, definitely. But now, once you know how to trade, it starts affecting you. Now, it doesn't affect me with my live account because obviously I've got it, but if for somebody that knows how to trade now, they've got to jump through some hoops now with IG to get the professional account sorted. And you don't want to be lying, seriously. I wouldn't be like sending in any dodgy documentation or like lying about it, saying that you've had the exposure and you've been trading all of these notional products for the amounts that they want, because you know, like you don't want to be doing that, do you? Because you're giving them your money, and if they turn around and say we don't believe you, we think we've used different, you've used fraudulent type of means to access our leverage, we're gonna bloody do whatever, you could end up getting yourself in a load of trouble. So I wouldn't do that. You just got to be honest and just say, take it on the chin and say, right, no worries, I'll just stick to this account that I'm on. But it would have done me a massive favour. It would have saved me money. So I think it's a good thing for anybody starting off. I really do. My initial balance zone is 8 till 7, pal. So as you can see, right, that's the 8 a.m. 5-minute candle. And that there is the 7 a.m. 7:30 a.m. was a swing high. So I just box that off and that's my IB. That's how I identify Ultra. Kurt's getting short the euro at 11668. Let's have a look, Kurt. Ah, Kurt, I can see what you're doing. I can see that. So you're thinking like this badger into here, aren't you? You're thinking this is going to punch into there and we're going to roll. You know what Tom said to me, right? Because I know you're trading Tom's strategy there, and I don't want this to affect your strategy or the way that you're hitting this at all. But when I was out with Tom, when he was explaining to me how he would trade this level, this retest here would have put him off, and he would, he might, you know what, he might be completely wrong, and if he's in here and he's listening, I would love him to shout this up. I remember I've been out with him like, right, okay, similar trade to this, like this looks a lovely level here, and he pointed out to me that this had been retested already, and he only likes the ones that haven't been retested. But it's a huge daily level as well, isn't it? You've got this point here and you've got this point here, so maybe you will hit that. I don't know. You've got this old double bottom, and you've got this lovely sort of move away from it, and as you say, Kurt, it's sort of like a big sort of like long rounded retest up into it. I hope you're smashing, mate. The trade looks good. I'd like him to clarify that, we should send him this chart. Should we send it him now? I'm going to send it him, see if he answers, because that's an interesting chart, that is, Kurt. Let's see if he'll take it, see if he's awake first of all. Let's see. Let's just message him. You selling the euro at 668. Now on WhatsApp, normally when somebody's up or whatever, you normally get 2 ticks, don't you, when they've got the message? I haven't got the 2 ticks yet. But when he gets back to me, I'll let you know. Because there's certain little things where he wouldn't get into that. Now I don't know if he's classed as this level here has been retested here off these. Do you understand what I'm saying there? But in the bigger picture of the daily, it still looks like it's a cracking level, that does. So that might take the overall context to be still okay. But I've seen this here before in the past where he'll say, "Oh no, it got retested on that level." There are like the ones where it's not been tested at all. So I might be completely wrong though, but I'll see what he says. Let's get back into it. Trend the market. So did you get short then, dude? Have you been short this market this morning? I haven't seen your previous thing. So was that, were you thinking you were going to get short in here and your stop was going above that pivot? You had a limit at 80, so you missed it, right, Mark? So you were just right, Mark. So you just you have sort of orders in the market then. I didn't realise that. I thought you'd be like more point and click type of guy as it's unfolding. That's interesting. So you were looking for 80s here, right? I get you. That's interesting, though, because I thought you would be sort of like as price actions unfolding, just press like buy in this level here as we're moving away from the level, or maybe buying in here rather than having orders in. It's good, isn't it? It's good, isn't it, looking at... I love it. I love getting into other people's trading. I do. I don't know why. I find it dead interesting how other people see the market. And I'm not trying to like delve into anybody's strategy to gain any edge from anybody or anything like that. I just find it really interesting how people see the market so many different ways. Everybody sees the market differently. It's what makes a market, but it's so interesting to see how many people like trade a completely different way. And you know, the end product is all the same. We're all trying to make money, aren't we? But everybody sees things differently. Dead interesting. Just nothing on for me here now with this DAX, guys. Straight in the middle of balance. Now these are the types of days where I just don't get a trade really. We need to get back outside balance now for me for any setups appear. Yeah, Angelo, I felt that too. First glance at that chart, you would think that something's going on there already, wouldn't you, with the euro? Maybe they won't get that push into that level that they're after. Yes, Ultra, I want to do that, you know. That's something that I want to start doing. Yeah, I agree. The problem is, no, not many people want to give you the strategy. That's the problem, Ultra. They really don't. Mark Wogan, I like 20s, 50s, 80s and round hundreds too. So you're in the FTSE day count then, Mark. If you want me to send you the FTSE day manual over, he goes for numbers like that. That's his wash and wipe. So when he's saying wash and wipe, the wash and wipe is of the number. So if like it goes through 80 and wash and wipes through it and then goes back above it, he will be balls deep long. Similar, but same as say, you get edges from everywhere in the market, don't you? And I do agree with you that especially the 80s and the 50s and the hundreds, they do act as magnets. They do. So I was looking at that on Friday with the DAX when it tagged 15.6. You just have to be aware of it. So let's go back to Friday. And if you see on Friday, the tag at 15.6 here, bang on 15.6 there. Look at that. There's 15.6. Literally pinpoint, bang on the double O's, bang on. You know, and what a reaction we had from it. So I agree. I do agree with you that these types of things, they do work. You know, and you sort of, if you feel comfortable trading in that way, then it works for you and it gives you an edge, and it, you know, brilliant, smash it. But you have to be aware of all these numbers, definitely, because they do act like magnets. Josh, you're trading the IB, keeping you out of trades. Probably would have been short already in euro. Yeah, that's the thing with the IB. Same as say, Josh, right? I've never seen an uptrend below an IB, never, and I've never seen a downtrend above the IB. So, you know, like you get reversals that go through IB and then reverse back up, and I call them like sort of trend reversal type, like bias reversal days, where you'll be below the IB and then we'll go back up above the IB. Like that's a reversal, but it's not an uptrend. And I just find the easiest way to trade is by getting like the days when, you know, like the momentum in a market is only ever directional when someone is prepared to push the market out of balance. Like if somebody or whoever it is, or a group of people or banks or whatever are pushing that market through balance, and are willing to push it higher, you know, they're the people that I find that they're the people that you want to be on the same side of the flow as them people. It's the same in anything. It's the same in any auction. If you've got a buyer in an auction, like I've been in car auctions, or like thousands of car auctions, right? If certain people turn up on them auctions, like everybody knows it. Like we know that the big guys are in. Like I only had a small forecourt, but when the guys from Arnold Clark were there, when the guys were there from the big car supermarkets, they weren't looking at the cap guide, which is the current auction price guide. I look at that as being like initial balance. That's the market's balance. That's what the market thinks is an acceptable price, right? The initial balance. It's balance until somebody's willing to take the plunge and pushes out of that balance and think, you know what, I'm not bothered, I'm going to pay more for stuff today. And then what happens is after that point, all the cars kept on going above the, you know, like the glasses guide or the cap guide, because these guys are, you know, like they were the big fish. They were the ones that were sort of creating the price dynamic in the auction. You know, like if they need to buy, they ain't bothered about, you know, a technical level of what the auction price or the guide price in that auction, that car auction, says that Ford Mondeos in the last week have fetched $5,000. If the Ford Mondeos are going through and they need to buy them, they need to restock them, they'll pay $5,700 for them. They don't give a shit. They just need to get the business done. Why? Because they need stock. They've got to do business, right? They've been given orders. They've got numbers that they've got to hit, so they just buy. They're the people with big pockets. They're the people that control the market, the price of the market. So guess what happens next week? All the guides, they go up because these guys are paying more. And it's the same with any market. So with the DAX, it's the same. If somebody from Deutsche Bank comes in and he's been told he's got to buy the market, he's not bothered about the technical levels. He is not bothered about anything but getting his order in. Now, if he will push it above balance to get that order done, he doesn't care. And they normally do it in like 1 or 2 or 3 waves. And that's what I've seen that happens. And that's how I look at the initial balance. It's the same with any market. It's just market dynamics. And, you know, when somebody's willing to push the market out of balance, they've got way bigger pockets than me. Way bigger. So I just want to try and be on their side if I can. And if I can get an entry, you know, and stick with them, I think that at the end of the month, end of the week, I will probably be, you know, I'll probably make money rather than lose money. You know, yes, you get the odd trap through the bottom of balance where you've got short right at the low and it's sort of they've used your liquidity to, you know, but you've got to, you know, I don't know what they're doing. I can't be right all the time. But that's how I look at the initial balance. And it's like I said to you, go to any auction, go to a car auction, go to a house auction when a big property buyer's in the market. You will see these big guys and they don't care about price as much. They don't look at the guidelines of what everybody else is thinking and what everybody else thinks. They've just got to get the business off. They've got to do it. And that's how I look at it, really. That's why I use the IB. Because that means, it tells me that, you know, like, I probably, the guys, when the market's in balance, the big guys, they're probably just not really interested in, you know, they're probably just sort of getting a few orders off or whatever. But when they've got a fundamental or say like a macro driver to get into the market and buy or sell, you know, they just push the market. And that, like, the first sort of step in that is, right, we've broken balance. Somebody's pushing it through here. Yeah, they do split their orders up. I do agree with that, but that's where you can see the wave type form come in. So obviously, if you get an open drive off the open, you can see somebody big's pushes straight out of balance. Normally, he's not going to get all of his orders through in one go. Then you get like the tight consolidation, the flag, and then they go again and push it again. So that's how I see the IB anyway, guys. Right? Because same as say, the markets, I don't think, you have certain days with a market, I think, where the technical traders are trading the market. And then you have certain days where the big boys are in controlling the market. And it's the same with our old car auctions. When the normal forecourt guys are in there, that, you know, you do find that stuff did go for guide price and stuff like that. You know, a lot of the time you could get a decent price car and stuff like that, but when the big boys are in, they don't give a shit. They just push the market around. It's the same with the DAX. That's how I see it. Now, if a market is hitting a fib, or it's like, reacting to the IB, to the IB high or the IB low, that tells me a few things. That tells me that the big guys aren't in the market because I don't think they're looking at stuff like that. I think that's more like the technical prop houses, all of the smaller individuals that are in the market, who are probably still very big, but they're controlling it all at the more technical type levels. You pull up a trend day, you pull up the last trend day that we had and look at it and just look if it reacted to anything but buying pressure. If it was an uptrend day, that's all it reacted to. It didn't react to any levels. It didn't react to any moving averages. It didn't, fib levels, whatever, it went straight through them. Now, the people that are doing that to the market, when that happens, they are not looking at what technicals are doing. They don't give a shit about it. They've just been given a quota, an order list. Get these through. Get this guy out of the market. Get, these want risk on, these want risk off. Get them done. And that's it. Would I be willing to share your full strategy in a video or a PDF? Altro, not really, mate. No, but you probably get a good feel for it if you watch me back. I don't think that really helps anybody, Altro. And obviously, by sort of feeding somebody your exact strategy, you probably won't trade my strategy anyway. Even if I did do that, you'd probably end up not thinking it would work. Or I always say to everybody, try and find your own. If you're trading the DAX or you're using initial balance, you'll come up with your own edge. Don't let my sort of biases and how I set the market up context-wise corrupt your thinking. So I don't think I will be doing that anyway. There's snippets of it though in this, because I've been trading this account now for like 4 weeks, and if you watch the videos, I'm sure you'll see in a roundabout way what I'm trying to do, basically. But keep looking, dude. If you're struggling to try and find a video, a strategy or something like that, and you're looking for edge, like I said to everybody yesterday, backtest edge. Go and get yourself a spreadsheet out and work out what you want to look for, and see if you can try and find any niches in it, in the initial balance. You might think it's completely rubbish and it doesn't work, by the way. That's always possible, because sometimes, you can buy the best strategy in the world, but if your brain doesn't tell you that it's potentially setting up, or you can't see what I'm even thinking, you might not be able to see it to actually even trade it and trust putting your money into actually trading that way. Let's see what's going on. Angela, what are you doing at the moment? You've always got a few trades on. Are you in anything? Are you up or down this week? Is everybody up or down this week, guys? Has anybody made a trade yet yesterday? How are we doing? Are we up or are we down? I'm just interested. There's potentially something setting up for me here, though. Potentially. I would take a close through balance here, if we get it. We've got 2 minutes to go. So let's see what happens. £30 stops. Give me £2. £2. No, it's not, is it? Because we're not doing that anymore, are we? Sorry. £45. Yeah. Just get my live account ready. There's potentially something setting up here for me if we get this breakthrough balance. I need a close through first, though. This is the thing about having two accounts, guys. It sucks. It's dead difficult to do. That's why I keep making mistakes. Right, so the level is 74.3s. I can get more risk on than that. £1.70. Yeah. No, 157. 170. Yeah. No entry. No entry. Wait, no. Sorry. Let's see what happens, but I've got to wait now. short. You short are you change at 15505? Good luck, mate. Nicely called live. Hope it works out for you. You got gold. You brought some gold. You brought some gold this morning then, Angela, from the R3. Right, Aaron. So you're trading Nasdaq now then. Not much for you this week, no. Who knows? Yeah. Mechanical, very quiet week so far this week. Big trend days last week, so algos are expecting consolidation for the early part of the week. Yeah, we'll see. It does seem like that, but for me, just gotta execute my edge. Once I start thinking or like bias wise like that, I start getting I start to say I'll talk myself out of making the winning trades. So although I'm sitting here saying like, yeah, I agree with mechanical completely. That's what I would be expecting too, to be fair. But you can guarantee, right, the one trade that sets up for me, I'll think to myself, no, I'm not taking this because I'm expecting a consolidation day, will be the one that's like a 7 or 8 R winner. It's always the case. Always. So, like, when I backtested my strategy, I didn't take any of that into account, none of it. So, you've got to just take what shows up for me. But then, you know, like when you start out, you think, for Christ's sake, I was expecting a consolidation day. Why did I take that trade? So you can't win. It's like you're just stuck in a doom loop when you start thinking like that. Had a custom indicator code for me this week that I'm backtesting. Key swing areas in the market to only take the best SFPs. Nice one, Conscious Trading. That's good. Who's done that for you then? Have you done it yourself or have you got someone do it? SFPs are very interesting, right? I love SFPs. They're so interesting. You can get some fabulous risk reward on with an SFP if you're willing to hold that thing, because basically it's a swing failure, isn't it? So you have to, if the swing has failed at that high, you know, you're right or wrong. You know if you're right or wrong very, very quickly. That's why I love SFPs. I don't trade them, by the way, but there's definitely some edge there in SFPs. There definitely is. I really like that setup. Tom sells the SFP there, isn't it? He's the one that sort of brought that into people's minds to trade actively. And I think he has a certain way of trading it, by the way. So he measures the swing in and out. So... got 2 minutes for a trade here. Let's get the old box back up. It's going to be slightly less now. 1.6. Is it mirrors that candle not showing up on the chart? No, it's not. Look at that. Look at that candle there. It's not filled. This candle hasn't here. It doesn't look like that on my other chart. What the hell's it? Oh, that's dead odd. Did you see that then? It just filled up even though the candle had finished. That's so odd. Everybody see that then? Because I'm looking at this chart here and it looked different than what was happening on the screen on my computer. That's dead odd. It's like the data held off just as the candle was closing for some reason. Oh dear. I hope that's down to some sort of computer data. But my stream's excellent still, so that's weird. I hope our IG aren't sort of like got some sort of like Did you see that was weird, that was? I've never seen that before. Towards the end of that 5-minute candle then, that 5-minute candle held off being filled even though it was actually getting filled. It's like the market was going lower but it didn't show me on my screen that it was happening. Dead weird. Get Efi in the market, change. Heads up, Mark. Yeah. I haven't... This entry here didn't fill me with joy. This one. This candle. If it would have been a bit fuller and it would have filled to the bottom, which is what I was looking for, which is why I was so bothered about the candle not being filled properly. If this would have closed here and this would have been a decent red full candle, I would have taken it. There's a few things I was looking at in particular. And it's the close back in through here, but like I needed to see some momentum in this candle, which I haven't seen, which didn't get me in. Because although we've been out of balance and we've come back through balance, I haven't seen a convincing close through there. So for me, I wouldn't have taken that one. And this is where if you give somebody a strategy, you can't sort of like talk people through these bits. Like you've got to sort of know what you're looking for exactly. If this would have closed full here, I would have taken it. If this closed full here, I will still take this one and just pay slightly, worse a price really if you're getting short. If this closes full here, I'll take it and I'll still put my stop above that point there. But there's just there's no pace and there's no momentum for me. Like pace is important. Like there's just no pace. Like if we went through that level there, I'd want it to feel like the pace is picking up, not sort of stopping. Do you understand that? It's difficult to explain. But as you're working through the level, let's say your swings started from here, you need to see the pace picking up as it goes through, not sort of picking up towards it and then stopping. Now, yes, we could definitely still crack off down here. There's no sort of 100% indicator that, like, yes, we could still get a big red candle now and push straight through, obviously, but I just don't like it when it sort of stops right on the spot that I'm looking to get short at. It's as if like the move's done rather than starting off and getting into sort of a momentum type break. Does everybody understand that? I hope I've tried to explain it as best I can anyway without sounding like some type of guru, basically. Right, so you're trading the Nasdaq now, are you then, Mark? Awesome. Right, Angela, so you first heard the SFP from Tom. Yeah, me too. Me too. Although I have seen it in some old trading books where people, because if there was something called turtle soup, wasn't there? Now it's similar to how Tom trades in SFP turtle soup is. So turtle soup is a strategy where, and do you know why it's called turtle soup? Where ICT, I think he calls it turtle soup. But do you know why it's called turtle soup? The reason it's called turtle soup is because the turtle traders that used to use a 20 period Donchian channel would often be getting long as the Donchian channel hit the top of a Donchian channel, or the bottom of a Donchian channel, they'd get short, a 20 period. So what they used to do was, people knew that they were getting long or short, they'd go against them and they'd try and fire the market back to where they thought their stops would be. And it's called turtle soup for that reason, because of the turtle traders. They used to take those setups, and I'll put a Donchian channel up so you can see what I mean. You use a 20 period because the turtles all use the 20 period Donchian channel. Now, they would be getting long on the square breakout of a previous high like that. So let's look at that one there. Here. Just the first one I've come across, just to keep it dead simple. So there's the old previous high, horizontal 20 period Donchian channel from that level. Now, their system, this wouldn't exactly be their system, but on a daily time frame, their system would get them long here on the breakout of a high and a Donchian channel here using a 20 period, and their stop would go beneath this point here. Now, it's called turtle soup for that reason, that when they did their arse and got stopped out, obviously turtle soup. It's very similar to an SFP. Very similar. Now, if you Google turtle soup and trading, that's exactly what it means. Right, so I will be getting short here now, I think. Let's see if I can pull up a dealing box. Sorry guys, just got to keep my eye on this a little bit. So yeah, I'm thinking to myself, we could maybe go and auction down to yesterday's low. Come on, don't push down too much. You're going to skew my risk reward here. You're going to have to get smaller now. Fuck's sake. See, the more this thing pushes down now, the more it skews my risk reward and leverage I can get on the trade. Could just bump back up to 71 or something, that'd be great. Longest minute in the world, this. Oh, come on, for Christ's sake. It's like time stands still, this is. It's terrible. I'm stuck in the twilight zone. In. Sorted. Right, see what happens. It is what it is. Let's see if we can get a push down to yesterday's lows. Down here. First target. Yeah, that would be too tight for me, that stop just above there would. It's got to be there for me. It's not a massive stop, that they're not, like change. It's not massive. Still okay. It's not massive, that. It's alright, I can cope with that. Hopefully still be enough room in it to make some money if it does move, basically. It's not a massive stop. Yeah, that's it, Wayne. She did. Linda Rash did trade Turtle Soup. Friday's low would be approximately 2R. Yeah, and if we got down there, Nick, I would probably take a scalp there, especially if it was sort of, like 1 o'clock, 1:45, something like that time. If it took us that long to sort of rotate down there, just because obviously coming into the American session. But hopefully, you never know, it could just go straight back up and stop me out. That's normally more than likely more probable. Morning, Sierra. So yeah, Turtle Soup is a thing. You can make a system to trade that. Tom hasn't given me an answer back, by the way, Kurt. Hey up, Angela's tweeting me some stuff out. I'll retweet it so everybody knows who Angela is. Awesome. There you go. Sierra, by the way, I don't know why. Wanting to explain this, I haven't tried to be an idiot or anything like that, but I don't know why. But for some reason, my account's unfollowed you. I don't know why. I don't know if that's a good thing or a bad thing, but I'm just going to follow you again now. So I'm sorry about that. I was going through some account the other day and I was looking at things, and I don't know if I don't know what happened, but I don't know if I must have pressed unfollow you, but I didn't mean to. So sorry about that. Do enjoy your tweets, to be fair. Pretty good. Here we go. Straight back up. Might have sold the low, guys. Might have sold the low. No, yeah, I'd probably just scalp down there, Matt, and move to break even if we do push into yesterday's low. You have to think logically, though. We don't really know, do we? I'm hoping that we're going to go down there, but we don't really know. This could be the low. This here could. Like this could just push straight back into balance, and this could be the low for the day here. You don't know. This is the unknown, the great unknown. This low here could hold, and this could go back up to balance and start me out. It's probably more likely to do so, really, if you're thinking about things in an overall context. But that's why we have risk reward, isn't it? But nobody knows. This thing could just push down and it could go through yesterday's low and it could just keep going. It's the unknowable. But you've just got to buy the ticket and stick to your risk reward, and that's it as traders, really, for me. You'll never forgive me. I'm sorry. Honestly, I'm genuinely sorry. I don't even know how it's happened, but I noticed it last night and I didn't want to follow you again until I'd explained it, because I thought it looked like a bit like, look like a bit of an idiot, but nothing that you did. You know what I mean? We just needed a break for a few days, Sierra. Just needed a break. But we're back together now, buddy. Trend the market, I will do. Trend the market, I will do. I did say I'd like to follow everybody in this room. So if I haven't followed you, it's not because I've not wanted to. Tweet to me, and I'll follow you. I don't know if that makes any sort of gain or positivity to your life or whatever if I'm following you, but I will do, because obviously it's nice that we're all in the similar sort of room and that, and obviously we're getting to know each other. So if I don't follow you and you're in here, tweet to me and I will follow you. It's not like I'm not following someone because how can I put it? It's not because I've not wanted to anyway. It's just because I've not thought to press follow. You've slept with Tom Argo behind my back. Naughty, naughty, naughty Sierra. Them Danish guys though. So yeah, I'll follow everybody. We should all follow each other. Twitter's good for that. And if you're in a live trade, guys, send it to me. Send it to me. I will send it out. It's good. We need more of this on Twitter. What the hell's going on here now with this candle again? It's not filling. Something's going on with my platform this morning. This is weird. Where are we trading now? 70s and 71s. Yeah, look at that. Can you see that? There's something going on with my platform. We're trading 70s and 71s, right? That candle there is 69s. So it's not filling. It's weird. Can you see this? Again, it's not filled again. So the candle's not filling up. The price isn't filling the candle. Yet the market's trading up. We're doing 73, 74s. And then it just fills all at once like that. Bastard. It's not looking good now. Back above the IB. It's lagging. I agree, Kurt. It is lagging. Something's going on. I don't know why though, because I've not seen that before. It's like the data's lagging to fill the actual price on the charts. The actual deal box, the numbers are looking like it's moving through the price fine, but the actual infill of the candles isn't working very well. There you go. Aaron's getting long as we're getting short, boys. This isn't good. This isn't good. That's a good story, isn't it, Angela, about what Tom did? It's a good story, that. I've tried to magic something up like that myself with the FTSE when I was first starting off, not knowing what Tom did. When like 2011, 2012 come along, I realised that at the end of the day on the FTSE, he didn't really, I didn't make any money from it anyway, but I was thinking to myself that it moved in a certain way in the last minute, like the last 21 seconds, like 20 seconds, let's say 20 seconds, but from this particular period it would move a certain distance, but did I make any money from it? No, I didn't. So there was no edge there. I thought I saw one and there just wasn't. Yeah, well, Aaron, I wish you all the best, mate. If it sets up for you, you smash it. Because they must say, this puppy could be wrong this morning. I could be wrong with this trade. It's looking likely at the moment that this low here is going to hold this one. So, but the problem that I have is, right, when I've back tested, I've seen days where this thing will go all the way back into IB. You know, take me for a maximum excursion, nearly stop me out like by 3 ticks. And then it will roll over and be one of the biggest days of the week. Now, I can get out of it here. And some people say, oh, once it goes back into IB, would you not just get out? But I don't want to get into guessing on the second leg, on the third leg, on the fourth leg if it's going to do it for me. I just prefer to put my stop in and leave it. Actively managing it, the position, and getting out of some here if we go back into IB and then trying to get back in some again. It's I've always come undone by doing that. Always. And I always just think you're better off just doing nothing, just leaving it and letting it hit your stop and sticking to what you've back tested for, rather than trying to like get in and be the trader and try and sort of micromanage things. If it goes back up and stops me out, it is what it is. I'm stopped out. If it goes back out again later on in the day, you know, I'll take another one. I just want the market to prove to me that I am definitely 100% wrong on my trade idea, more than anything. Which it would have to go through this level by like 1 tick or 2 ticks and stop me out to do that. And I'm looking at it like, right, okay, well, if we've just been through one side of the balance, to me so let me explain. If we've just been through one side of the balance, my bias is still downside, to the downside. I wouldn't be thinking to myself that we were going to have an update until we get back through the other side of balance. So as long as we stay through the bottom of balance, yes, we can go back into balance, but it still doesn't mean that we've got an update. It means that we could roll over again in the afternoon, because to me the bias of the day, as long as we've stayed on one side of balance all morning, the bias for the day is likely that we carry on lower until we take out the high of balance. At this point, I don't think that, from me, how I look at it and set it up in my context, we haven't seen the reversal. We're just inside balance, and we've been out one side of balance, which means that I'm sort of thinking to myself that we could still potentially go lower. That all stops, and my thinking stops like that once we get out the other side of the balance. And then I call that a bias reversal day, as I've explained earlier on. And they happen. So yeah, guys, I'm going to get off here though, guys. I'll leave you with it. I hope you smash it. If I micro, I mess everything up. Yeah, that's me trend the market. I'm like that too. I am like that. I always mess up. Always when I'm micromanaging. I will always, because what I find when I'm micromanaging, it's normally at the point when I'm thinking that I'm wrong, because that's why I'm trying to micromanage it. Like, I'm thinking that something's going to happen other than my strategy. Why do we micromanage a trade? The only reason you would do it is if you saw something that was sort of telling you that what you were thinking when you started your plan off wasn't working. But a lot of the time, those biases, they come from watching what's happening now, right? But you haven't backtested to have those sorts of reflexes and move your stop and take profits too early and stuff like that. But if you've backtested a strategy, that you've got to stick to it, haven't you? And I always find that I start micromanaging my stuff at the worst possible time. It's just human emotion, that is, because you just want to do something. You feel like you need to touch the mouse, you need to get involved. You know, something's just not looking quite right to you. But human emotion for me and my types of biases, they never worked. Never. I always end up costing myself money and causing myself more stress, right? Digging a bigger hole than I needed to. I will say this, right? The one time I've tried to micromanage this account, and I've done it once, I cost myself 6R. 6R, right? And it was the day when I think the shit hit the fan on the DAX and I should have been short, and I tried to micromanage it because it ticked up against me and I got out, and then I just missed the trade on the way down, and then was like, it moved that fast without me, and I ended up taking a £20 loser when I should have been like a £200 winner. And that's what micromanaging does for you. And I will always try and micromanage it at the wrong time. So it's just not worth it for me. James, that's lovely of you. Thank you. I appreciate that. Thank you very much. It's a lovely thing for you to say. Cheers all, Aaron. Yeah, I'm going to get off though, but thanks, Wayne. Yeah, I see that. IG have got a problem with the S&P and the Nasdaq. Says market suspended. Let's have a look. Showing up as working to me. Oh, I don't know. There's a bit of a gap there. Is that the gap that you're talking about? That might have happened. Yeah, this gap here. I can see what's happened. Something's gone wrong. That's why the data's probably not working on my DAX, right? That all makes sense. It explains to me that does. Oh, happy birthday, Trend the Market. Good one, mate. Have a good day. Hope you have a fantastic day. Good one. Have a great day and enjoy your celebrations. I don't know how old you are. Don't know if you want to point it out to everybody. 21, I'll just say 21. He's 21 today, Trend the Market is. Wish you all the best. Have a good one, mate. But yeah, I'm going to call it now, guys. You're so right about that, Mark. What, Angela? What do you mean? Micromanaging. Is that what we mean? Sherlock made 1R on Euro Aussie last week. Should have made 6.5R micromanaging. Yeah, it's tough. You got to just leave it. You got to stick to what you've backtested for. I always pick the worst moments. Always. I don't know why. I've never micromanaged once and helped myself out and thought, do you know what? You made a real good job of that. You made a fantastic job of that. It's always like, what the hell are you doing at the end of the day? Like, what have you done? You're a freaking idiot. You know, like, you could have made fortunes and you know, like, you've scalped out for 1R or something stupid. I don't know why. It will never happen. I could have micromanaged 100 times, right? But the amount of times that it's helped me out is probably 5 out of 100. And the amount of times I have done my arse by pressing the button at the wrong time has been like 95. It absolutely sucks. You just got to, like I say to you, yeah, right, micromanaging. How do you stop that though, right? How do we stop that? You've got to not be in front of the computer, I think. It's the only way once you're in a trade. I just try and do something else or go for a run or take your mind off. But what normally happens to me is, right, I'll go for a run and the minute that I go for a run, my alerts start going off. Like, it always happens to me. So I can sit there all morning and no alerts go off and I'll just watch this price and it won't go nowhere. Literally the second, and I mean the second, that I get out on a run, alerts, bang, bang. Or if I go to the gym, I drive into the gym, alerts. It's like the market it always knows the wrong time to sort of press your buttons. Like, I could sit here all day, right, and it won't do a thing. I hope you're right, Sierra. I hope you're right. That'll do me nicely if that's the case. I think my stop's in the right point though, innit? I don't, if we get back above 000 there again and sweep that high there, I'd say that I'm definitely wrong on the day. So we'll just have to see what happens. It's back on now. Good stuff, Wayne. Right, so I'm going to get out of here, guys. Thank you for stopping in again. It's been good. It's been a good talk again. Enjoyed this morning. I'll be back tomorrow. I will see you tomorrow morning. And I hope you all smash it and have a good day. Take care and stay safe out there, alright? I'll see you tomorrow.